Even if you're doing the right things in crypto, sometimes we can feel like we are really broke. But these are some signs that you're on the right track and actually doing well, or at least better than 90% of the people, even if it doesn't feel like it. You survived the longest bear market and didn't sell everything. And yeah, simply by staying in the crypto market, you're already ahead of most people. For over 500 days, Bitcoin has shown negative returns with a maximum decline of over 80%, and you still haven't given up and you still believe in crypto. This is a sign that you can control your emotions and understand how delayed gratification and investments work. Let me show you something. This is a chart of crypto audience activity overlaid on the Bitcoin price. As you can see, the lower the Bitcoin price becomes, the fewer people are interested in crypto. And we are almost hitting an all-time low for the last 3 years. But in reality, this is the point everyone in the future will be dreaming of coming back to buy as much crypto as possible. This market phase is called accumulation for a reason. Bitcoin has a 4-year cycle, and every 4 years, a price regulation mechanism called halving is activated, which reduces the supply of new coins by half. Halving makes Bitcoin more expensive to mine and initiates a new cycle in crypto. It's only a matter of time before we reach a new all-time high. You haven't lost everything. Most people lose all their investments. If you were able to survive the Terra Luna crash, the FTX collapse, wallet hacks like Atomic Wallet, and the emergence of meme coins without losing all your money, you're lucky, you're doing great. According to statistics, 80% of new crypto investors lose between 50 to 100% in some cases. If your losses are around 50%, it's a relatively good indicator. And I know how you feel, but hear me. The worst that could have happened has already happened, and the only direction we can go now is upwards. Of course, unless there is nuclear war. If that happens, crypto will be the least of your worries. So, your crypto assets have every chance to recover during the next cycle and reach new all-time highs. And using a strategy like dollar cost averaging can help you turn a profit much faster. But there are two more important things that show you're doing really great in crypto. That is having a plan and what they call disaster fund, which we will discuss in the final part of this video. Yeah, having a good plan is much more important than the amount of investments. Even if someone has $1 million in crypto but doesn't know when to cash out, that person is doomed to lose money. But if you have even a simple plan, it significantly increases your chances of success in crypto. And what do I mean by plan? It includes at least 4 things. Investment time frame. Understanding whether you are a long-term investor or a short-term trader in the crypto world. This will determine how you should react to news and trends. Desired profit and risk. Taking the time to figure out how much profit you can make from different cryptos. You can buy a meme coin and buy a Lamborghini or lose everything. Or you can buy Bitcoin and earn 50% or lose 20%. Profit is determined by the risk you are willing to take. Assets. Deciding which assets you want to put your money into and beginning your research on them. Otherwise, you will end up buying random cryptocurrencies from the news, and that's a bad idea. Trust me, I know that. Entry and exit points. Knowing at which price you are willing to buy and sell an asset simplifies the decision-making process and eliminates the possibility of emotional decisions. But remember, these points must be realistic. You can calculate them based on the market capitalization of a currency. For example, let's take Bitcoin. There's no chance it will be worth $500,000 in the next 2 or 3 years. That would make it equal to the market capitalization of gold. The world is not ready for that yet. But we have already seen Bitcoin at a price of $70,000. That's a more realistic target it can achieve in 1 to 2 years, and that's something to start planning with. You keep your assets only in a hardware wallet. Hardware wallets are something super important, and I talk about them in almost every video. No one wants to invest their hard-earned money, dedicate their time and energy, only to find out that CEO of some company is using their funds to buy houses or losing it all in a casino. Yeah, there is a high chance of losing money due to exchange bankruptcy or even the hacking of regular wallet on your phone. Therefore, to be safe, it's highly recommended to store all valuable assets on a hardware wallet. It's a must-have for those who are in crypto for the long term. If you have set it up correctly and hidden the 24 secret words in a secure place, it guarantees that your coins won't disappear. There are many different brands of hardware wallets on the market like Trezor, OneKey, Ledger. I personally use Ledger, it's one of the largest brands out there, and it has never let me down really. You can choose whichever one you prefer, I'll leave the links in the description below. You use staking as a method of accumulating coins. Staking is often underestimated, but it can really make you a bit wealthier. Every coin based on the proof of stake consensus has a certain inflation rate. On average, it's around 6 to 12%. This means that if these coins are sitting in our wallet, waiting for their moment to shine, we are losing up to 12% of our money yearly. Yeah, we still have the same amount of coins, but during those 2 years, while we wait for a new bull market, new coins are being created in the blockchain. So our coins gradually lose value. This means that in order to stay in the same place, we need to keep running. That's why I recommend after watching this video, you go through your portfolio and see what you can stake. You'll be earning practically free coins that will be worth 5 to 10 times more in the future. You have a disaster fund. It's something that is not related to crypto, but you're doing really well if you have such a fund. A disaster fund is money that you can use in case of emergencies such as job loss, laptop or phone breakdown, medical expenses, and to buy the dip. Yeah, ideally the first part of the disaster fund should consist of 3 to 6 months of your expenses if you have a stable job, or up to 9 months of your expenses if you're a freelancer. That's basically emergency fund. But the second part is money that you can use when good opportunities arise in the market. Bitcoin dropping to 15k, a new coin being launched, and so on. This part of the disaster fund doesn't have to be large, everyone determines it for themselves based on their income, budget, and goals. So guys, stay motivated, stay invested, and thank you for watching this video. Also subscribe to the channel to get more crypto insights, and see you in the next one.